Okay, welcome everyone. Okay, welcome everyone to our call today. It's an exciting call. We got some good announcements, some clarification so people can understand a little bit more about how the process works for us to go to the next step, the value of the tokens that we have, how that's going to work with the staking and stuff like that. So I'm just going to keep it real short. I'm going to let Mr. Marcus go ahead and do his thing and explain to us what we got going on here right now. So Marcus, the floor is yours.
Okay, great. Hello, team. Good evening, good morning, wherever we at. Good afternoon, wherever we at. Exciting stuff. What I wanted to do today was give you guys a rundown over everything, but as I got through it today and prepared for this call, it's just a lot of information. So Jamal and I thought it was best to break it into two calls. So we're going to do a call today that's going to be on the first portion of it. And then a call, we'll let you know tomorrow, call tomorrow or Sunday. Do we do Sunday calls, Jamal?
We don't. Yeah, we're usually on every day, but we'll see if we're going to do Sunday.
Okay, so we'll do the second half of this call either tomorrow or Sunday.
Okay.
And then after that, you guys will be ready to roll. So the first half of the call is important because we are in the coin business. We are in the blockchain crypto business. It's important for us to everybody get a better, deeper understanding of coins in general, real quick, but then a deep understanding of what makes. We got to do that. So we tell you what makes HNFT, our new coin, special. Really special. Okay, so let's start with this. I'm going to that I can screen share. Let me screen share. Okay. And I'm going to go here. Also go here. And you guys, most of you, many of you will be familiar with where I'm at, which is CoinMarketCap. CoinMarketCap is where you can check the price of coins and what's going on coins, the history of coins, etc. Okay, so if you look here, the number one coin is Bitcoin. Everybody knows Bitcoin. 19,431 is the number one coin. It's number one not because its price is higher, because there are coins that are higher priced than Bitcoin. There are coins that trade higher than 19,000. So it's not number one because its price is the highest. It's number one because its market value or market cap is the highest. So if we go over here from price to market cap, the market cap of Bitcoin is $372 billion. $372 billion. And with that, what that means is that if you take the price, which is this 19,000, and you multiply it by all the coins in the circulating supply, which is 19 million, you're going to get this number, which is 372 billion. So there's 19 million coins. Each coin is worth $19,000. If you multiply those two together, you'll get this market cap number of $372 billion. Now, interesting to note is that the 24-hour volume means that this coin has traded $43 billion has traded through the coin in the last 24 hours. 2 million coins traded, so $43 billion is traded through the coin. That's very high liquidity. So if you had $1 billion worth of coins, you could trade $1 billion worth of coins and it not move the price because it has very, very high liquidity. So here on this, as it pertains to us, we're looking at price, the supply, price times supply create the market cap, and then the daily volume. Those are the numbers that matter, at least as we talk about the value of a coin and what's happening with a coin. If you look at the number two coin, it's Ethereum. 1,300 is the price. There are 122 million Ethereum coins out there in circulating supply. Multiply those two numbers together, it gets you $162 billion, which is the market cap. And it trades $14 billion a day. Okay. Tether is stable coin, so obviously stable. It's worth $1. It has 67 billion coins out there, which means that $1 has a $67 billion market cap. and $55 billion go through it a day. USD coin. Whoa. You guys can probably see that. My battery is low. BNB coin is, Binance, which we use to pair against, $284. There's 161 million BNB. So it gets us to a $45 billion market cap, and $900 million goes through there a day. So 1 second, I'm gonna grab my cord, and then I'm gonna continue.
If you're learning something new today, just put it in the chat box. Just put I just want to see who's learning something new about market cap and liquidity. People talk about coins all the time, but I don't know who's actually learning something new with it. I'm gonna put I because I'm learning stuff right now too. So anybody else is learning, just put I in the chat box. Just want to see when people are actually learning something. Thank you. Wonderful, wonderful, good. Me, myself, and I. All right, good. Thank you. Good. I want to make sure these calls are valuable, so I'm glad to see people are learning. Good, Mr. Myrtle.
Okay, so
Awesome.
I'm back, plugged in. That's okay. All right, so BNB is at 284. Market cap, supply is 161. You multiply those numbers together, you'll get this market cap of 45 billion, and you get this volume of about 1 billion, 95. Okay. So if you go down to the top, you may have heard of Cardano, Solano. If you're into this thing, Dogecoin. If you're into crypto. So to be a top 10 coin, because the ranking is determined by the market cap. To be a top 10 coin, you have to be $8 billion coin or better in today's market. So if our coin was, let's say, number 9, Solana is 11 billion, 0.7. Dogecoin is 8.1 billion. So if we were 8.2 billion, we would be the 10th most valuable coin on the market. Okay. Our goal is to be a top 10 coin. Our goal is ultimately to be a top 1 coin. So to be a top 10 coin, we have to reach $8 billion market cap. Before that, let's see what it takes to be a top 20 coin. To be a top 20 coin, which is Litecoin, it takes 3.8. So we'd be a top 20 coin. If we were today 3.9 billion in market cap, we'd be a top 20 coin. What about top 50? Okay, Pax Dollars is top 50 coin. It's 947 million. It's this market cap. So let's just say we had $1 billion market cap or $1 billion market cap. Okay, we would be a top 50 coin.
Marcus?
So our goal from a coin standpoint is at first to become a top 50 coin, which is and be a coin worth over $1 billion. Then become a top 20 coin to be over $3 billion. And then the top coin, which would be worth over, or top 10, worth over 8 billion. And eventually a top coin, which means we have to get to somewhere around 400 billion. So if those are markers, what I want to do is explain to you both mathematically how we get there and then functionally how we get there. So since we're in the mathematics session right now, we're gonna keep going in the mathematics session. Our coin, and I should have had this, where can I get it? I should have had our tokenomics up. Where can I get it? Maybe here. I can get it here.
Hey, Marcus? Can you hear me?
Oh, yep. Am I muted?
No, you're good. I was saying it might be helpful for people to understand that even top 50 is great because how many coins are listed on coin market cap so people understand how many coins, how much noise there is out there.
Oh, there's over 70,000 coins, and just on coin market cap, I think they list like something like 3,000. So top 50 is huge. To be a top 50 coin is huge. It means your system is liquid. It means you're in good shape. So to be top 50 is a huge feat. Okay. Okay, so as you've heard us say before, it's not here. Tokenomics is not here, but you heard us say before, there's 61 million total tokens in our ecosystem. So 61,309,023. 61,309,023. Okay. Now, so if we have 61 million, this is work with 61 million right now. If we have 61 million tokens, right? And those tokens are worth $1, then that means the company is worth $63 million, $61 million. If we go back here, if for us, we had this was humanity, and it's worth $1 here. Like if I go to one of the stable coins, like Tether is worth $1. So if here we had in our circulating supply, we had 61 million instead of 67 billion. We have 61 million here, and it's worth $1. That means our market cap would be 61 million. Okay. So if our market cap was 10, then this was 10, this was humanity, this was 10. We still have 61 million here, then our market cap will be 600 million. If our market cap was 16 here, and we had 61 million here, our market cap will be a little bit slightly over $1 billion, which will put us in the top 50. So there you go, top 50 here. So let me just do it on my calculator, just so I can give you guys the exact number real quick. I want you to understand the math, because a lot of times we talk about these coins and talk about this and that, but we don't understand really what's going on. So I was trying to make sure we understand what's going on, so we can understand, not only we can understand our coin, but we can explain it better to people. 61,309,023 times 16 is $980 million. So that will put us right above this PAX dollar here, 980, or it'll put us above this OKB, and we will be number 49. So we will have 16 here, we will have 61 here, and those two numbers multiplied together give us 980 here, and that would put us in the top 50. So we need a $16 price to get to the top 50. Okay. The price of our current coin is what, 15, 16 bucks? We need a $16 price in a new coin to get into the top 50. Okay. Next, if we want to break into the top 20, we said we want to break into the top 20, we said we need a $3 billion valuation. So break into the top 20, take out Litecoin, we need 3.9 billion. So let me just go 3.9 billion. Hold up, almost there. Divided by 61,309,023. We need a $63 coin price to break into the top 20, $63. Next, to break into the top 10, we need to be 8.2 billion. We put 8.2 billion in my calculator, divided by 61,309,023. We need a $133 price to break into the top 10. $133, and we'll be a top 10 coin. And to get to number one, we have 373, 1, 2, 3, 0, 0, 0, 0, 373 billion divided by 61309,023. We need to have a $6,000 coin price, $6,082, $33 coin price to become number one in today's market. We need a $16 price to get to $1 billion to be a top 50. We need a $63 price to get to a top 20, be 3 billion. We need a $133 price to get to 8 billion, be a top 10. We need a $6,000 price to get to number one. Okay. So those are our goals, and that's how you calculate that. So we can all track along as we climb the ladder to reach our goals. Now, what makes coins valuable? Well, at the end of the day, there's only two things that matter in coins and stocks and tradable assets. Supply on one side, demand on the other side. Supply and demand control the price. There's nothing else that matters, supply and demand. Now, what creates the supply? What creates the demand? It's a different story. But supply and demand creates the price. Okay? Whenever there's more supply, meaning there's more coins out there and less demand, the coin is going to go down 100% of the time. Whenever there's more demand, I mean more people want to buy the coin, and less supply, less people want to sell the coin, the coin's going to go up. So it's always supply and demand. Supply and demand. So look at our coin and how our coin trades. You know, we traded up, and early on there was a lot of supply and little demand before we started pushing it. So the coin set at whatever it was at, 50 cents, $1, where it was at. As we started pushing it, there was more demand. And that more demand, and because you guys were keeping the coins and know you were going to convert them, every time somebody bought coins and knew they were going to convert, there's less supply. There's less coins trading because people put them in their wallet and we're waiting to convert, which they converted now. So there's less supply. So the equation of being more demand, every day we were going out there to you guys and us, everybody telling more people, some of those people buy, creates more demand and less supply. There was a limited amount of coins, 300,000, they would always be going down, less supply, meaning our coin ran up. We ran up all the way up to $21. That settled now around $14 to $15. But most likely going back up, you know, before it crashes out or all converts over. But that was a function of supply and demand. Okay. All coins and all the stocks are always a function of supply and demand. Now, what can create additional demand? Well, great stories, great news, great, you know, if you look at the stock, when good news comes out, the stock goes up. So great stories, good news, good things happening increases your demand. Supply is just math. It's just how many coins are out there. Is there any way to decrease your supply? You may have heard of the concept called burning. Burning is when you destroy coins, and the whole point of destroying coins is to decrease the supply and make demand, to make the decrease the supply and have demand continue to grow, and then your price will go up. People always ask me, kind of, you know, in the history of Bitcoin, what made Bitcoin run up? And I tell people all the time, I ask people and tell people, and only one person has really, to me, got the right answer. And I met somebody here in Dubai who finally had the right answer. What made Bitcoin what it is today, as far as the price action, is MLMers, multi-level marketers. Now, some of you guys might have been around when Bitcoin first got popular in MLM, and people were buying packages and all kind of stuff. And basically people who understood what it was were buying Bitcoin and then selling them to MLMers as packages, a $60 package. With the $60 package, only got you $45 of Bitcoin, but nevertheless, that it was a package. What happened to Bitcoin is that it was held by mostly techies, and they was trading it around, and it got to whatever 5, 10, 15, 20 bucks, 100 bucks, it doesn't matter. But it got into MLM circles. And when it got into MLM circles, MLMers build teams. And every day you build a team, more and more people buy the coin, right? So what is that doing? That's increasing the demand. But unlike a product, lotion, potion, juice, products like that are unlimited. They don't run out. Every month they make new products, and so you can buy the product, and the price will be the same, etc. Bitcoin as a product was a perfect product for MLMers. Why? Because the supply was fixed. There was no more Bitcoin going to be made. And if it's made very slowly. So if it's made very slowly and it still has a limit and no more can be made to meet the demand, then you have a thing that's going up. So every time it created a self-fulfilling prophecy. Why do we say that? The bigger the network was that was buying, they increased the demand and they decreased the supply because they bought coins that took about supply. Which when they're doing that, they made the price raise. And when they made the price raise, everybody who was looking at it started buying, which increased the demand, decreased the supply, which made the price raise, which made everybody look at it. So for MLMers, it was the easiest game in the world. I know a guy put 400,000 people in packages. Why? Because you had a product that was effectively at that time, 2017, you had a product that's effectively was going up every single day. So you sell somebody a package today and they made money tomorrow. You sell somebody a package today and they made money tomorrow, right? Because the coin was going up because the demand was increasing greatly, the supply was shrinking, and therefore the price was going up. So in an environment like that, you could tell 15 people a day what the price is. They need to get on, and 15 days later, the price would have went up every day. And the ones who got on would have made money. The ones who got off, who didn't get on, kicked themselves. But eventually they would get on because the price was put on every day for months and months and months and months. At some point, you get sold or you sell yourself. So that created this huge run up in Bitcoin price, from the hundreds to the thousands to the tens of thousands to 20,000 to the first crypto winner, really second, but first crypto winner. Okay, so this thing is all supply and demand. Now, in addition to that, there's tokenomics. So you can adjust the supply and demand by creating stories that are carried in the marketplace. I.e., if I say something great that's happening with the company, then more people read about it, more people know about it, a surge of new people coming in to buy. Well, that's affecting the supply and demand because there's only 61 million coins out there in our universe. Much like Bitcoin, with only 21 million coins in this universe possible. We only have 61 million possible in the universe. Now, because of that, we have a fixed amount. Other coins have a floating amount. They can go. You can issue up to 2 trillion coins, 10 trillion coins. Because we have a fixed amount, the supply can't increase beyond 61 million. It's possible. So it's just about, and every day somebody takes Bitcoins, takes whatever, it decreases that supply, and then if they increase the demand at the same time, you got a coin that's going to be a rocket ship. So that's what we really want to focus on, is how to create value. Okay, so the second way you do that is by tokenomics. It's by creating the tokenomic, what they call tokenomics is just the financial system behind the coin. And this is why coins are so hard to create, because think of it this way. Financial system is really monetary policy. You have a currency, you're going to decide how the currency can be used. The Federal Reserve in the US has thousands, 9,000 of very smart employees trying to figure out monetary policy for the US. And they get to change their mind because it's not on blockchain. Every 3 months they come together and say, man, we messed that one up. We need to change the interest rate here, or do this to make this better, or put more money flow out there, etc. In blockchain, you can't change your mind because blockchain is blockchain. The whole point of it is that the rules are set at the beginning. So you have to set up your rules at the beginning to have a successful blockchain project. And you can't do that if you don't have a community, if you don't have people that are going to support the blockchain project. So the tokenomics here, or the main driver of our tokenomics, is a system called stake and serve. Stake and serve. This is what we're about to introduce to the world, stake and serve. So, as you probably heard before, in our system, you can stake to an NFT. So you can stake your coins to an NFT. You can't stake to company, you can stake to an NFT. What you maybe don't know is you can also stake to, there's 4 different areas to which you can stake coins. You can stake coin to an NFT, one of 300,000 NFTs. You can stake coin to one of the 10,000 teams in the African Startup League. So you stake to one of 300,000 NFTs, or you can stake to one of the 10,000 teams. There's also going to be 300 governance seats. You can stake to the governance seat of the decentralized DAO. So one day very soon, I will not be, the actual full decision maker of what happens with humanity, because some of you who actually have NFTs, some of you have coins, you guys will be the decision makers. There's going to be a DAO like or a DAO light, and then there'll be a DAO full blown. So I'm really more like a trustee of the platform, of the ecosystem, until the community takes it over, which won't be very long. Okay. Now, that being said, staking. When one stakes in our ecosystem, the staker, whatever the rewards get, the staker gets 65% of the rewards. So the staker gets 65% of the rewards. So if I, rich guy, go buy $100,000 worth of coins and stake that $100,000 worth of coins, then I'm going to get a return. And when I get my return on those coins, the person who I staked with, the entity. So if I stake with an NFT, say I stake with Jamal's NFT, when I stake, I get 65% of the returns. Jamal gets not of the principal of the returns. Jamal gets 20% of the returns, and 15% of the returns go into the royalty system, which everybody here is in the royalty system. So 60%, 65% of the returns go to the staker. 20% of the returns go to the stakee, whether that's a team, a startup team, whether that's a person through an NFT, whether that's a governance seat, or whether that's the last thing we'll talk about, what you can stake to. So 20% of that goes to that staking benefactor, and then the rest of it goes into the revenue, the royalty share. So 65% to the staker, 20% to the stakee, to the team, to the NFT, to the governance seat, charity, and 15% to the royalty share. Okay, now, what does that look like in dollars? Let's just give an example. If we have a 30% annual return, I go buy $100,000 worth of coins, because that's where I got to get the coins from the market. It ends up being a very good thing. Why? Because if I buy 100,000 coins from the market, I just drove everybody's price up. So I brought 100,000 coins from the market, put them in my wallet. Okay, now when I do that, and then I stake them, and let's say the rate of return was 30%, so that $100,000 will bring back $30,000 return over the course of the year. Now, with that $30,000 return, 65% return comes to me, the investor. So I would get basically 20 grand out of it. 20% goes to the team, the person, and the NFT, the team, or the governance seat, or the charitable organization. I'll talk about that in a second. And that 20%, so if I stake the $100,000, and 30% would be $30,000, and 2/3 of that would be $20,000. So I staked $100,000, I put $20,000 in my pocket, I got 20% return. I can't get that in the bank. I'm happy go lucky. You guys got royalties, you should be happy. The person who I stake with got 20%, so they got 12,000, excuse me, they got 20%, so they got $6,000. They should be happy. Everybody should be happy in this system, okay? Now, every time somebody, remember it's supply and demand, so every time somebody goes and grabs coins off the market and stakes them, that means that there's less supply on the market and there's higher demand on the market, and that's going to drive price up. Okay, so our staking system allows 4 types of staking. Staking to the NFTs, 300,000 NFTs, where the 300,000 NFTs gets a 20% benefit, or you can stake to the 10,000 teams. And the reason for staking between the NFT and the team is 2 different things. If you stake to an NFT, you want to get income cash. If you stake to one of the teams, you really try to get, you're gonna get your cash back, but you really try to get equity without risking your principal, which you can do here. So then the third step, the third thing is that, or the fourth category that we can stake to is charities. Now this is going to be a big one, because all the billions and billions and billions and billions and billions of dollars out there supporting charities will now have a new way to support your charity that doesn't really cost you any money. You want to support, Red Cross, I'm just taking an example, or World Food Program. You go out and buy $100,000 or $1 million or $10 million worth of humanity coins, tokens. You then take that and you stake that on their behalf. So if I stake it on the behalf of Red Cross or my university, then that person or entity gets to get the benefit from the staking 20%. So if I stake 100K, I still get my money back on principal on my money, and the charitable organization gets 20% of the coins, and they get to make that announcement. They get to do whatever they want to with that. So, but because the combination of those 4 things is staking, there's going to be a super high staking demand on our coin. Super high staking demand. Demand for people to want to stake inside and outside of Africa is going to be huge. And it's going to really drive the price action of the coin significantly up. And that's what I was talking about yesterday. So staking is a very, very big deal in our system. And our system for staking is better than anyone I've seen. It gives more rewards to the right people, and it helps everybody participate. With that, I'm going to stop here, let Jamal come off on mute, and then we can answer any questions that you have about staking, about the coin value, how that works, staking, how that works, any of that stuff.
Thank you, Marcus, for thank you for sharing in such detail. For a lot of us, my suggestion is that obviously we're going to post this recording, but rewatch this, because there's a lot of people out there that are in companies that have no clue how any of this stuff works, right? So you just got a nice education about how tokens work. You probably know more than 50% of people who are actually marketing companies and tokens, right? They're talking about who's involved and stuff like that. But it's important because you get to be able to build belief because you understand how things work a lot more clearly. So I'm going to stop the recording, and I would suggest again, watch this again tonight. So tomorrow when we go through the other pieces, you understand how the money works. But that's why we wanted to break it up into 2 pieces, because it's important that you understand what it is you have your hands on, so you feel comfortable when you share it with people, and you have that confidence because you do understand comparisons and stuff like that in the market. So I'm going to stop this right here so we don't have the recording too long.